Thank you very much. Thanks for having me. Ni Hao Han. I hope that was right. It's a great pleasure to be here. I wanted to be here last year, but unfortunately the typhoon that came in leads to a cancellation of my flight. But this time I'm here, so I'm happy to join you for this conference. So I want to talk a little bit about AI in finance, specifically with a link to FinTech. And we've been seeing that the financial industry was among the first to use IT systems in the past. If you think of when the first computers came in the 1950s, it were the banks that first used them because it's an information-based business. It's not very surprising though. This made it a core driver also of globalization because it could be used everywhere. Now, the emergence of various new technologies as we've seen it and discussed it today, like blockchain and AI also, and their convergence are paving the way for another, probably even more fundamental transformation as we have seen it before. So, fully digital on-chain money and the possibility to transfer values of any kind in between peers and institutions, and now also the possibility to use a chatbot or any kind of AI tool to know more about finance, I think is a really fundamental game changer. So what we can really now see after having the session this morning is to jump more into AI. And although it seems like it has been around the corner now for some years with ChatGPT introduced, this is much more of a, let's say, mature topic. And if you look back a little bit, there was kind of an AI boom after it was first discussed at the Dartmouth Summer Research Project, which has its 70th anniversary next year. So it's 70 years until the term was coined, basically, and also until the first proposals were discussed. And then, as you can see, there were many projects in between. One also was a driverless car. And you might think that Google and all the big tech companies were the first to introduce that. No, they were not. Mercedes-Benz introduced the first driverless cars already in the 80s. So that's kind of the Kodak moment that we have, or that this company had, right? Because they had it, and then someone else comes and does it, basically. So it's kind of a weird thing. And it's only a couple of years ago when IBM Watson won Jeopardy. Maybe some of you might remember when this happened. There was this very weird scenario where two humans were on stage, and there was this Watson just in the middle. And he basically championed those two, right? He beat them. And ChatGPT is only a few years old. So why did it happen so fast then? Well, the answer is very simple, because everybody can use it. Everybody has it on his or her app, right? You can just use it. And that's in stark contrast to inventions like blockchains or Bitcoin, which have been around for quite a while, but the usage is not so simple in most cases. So AI is coming along with some new things. So where are we going now? That is the big question. What comes after that? And this is kind of a hype cycle that you find with companies like Gartner Group and the like. So the things we are seeing is immersive analytics, AGI, and this is something as a second thing, explainable AI in finance, also digital twins and hyper automation. I will jump into some of those a little bit more into my presentation in the following slide. So immersive analytics, you can think of new visualizations. take a climate risk map, for example, of a city or of a country where you can browse through and see where the climate risks are, for example, and what impact this might have on finance, on credits, for example. In explainable AI, for example, these are methods and systems that make behavior decisions and output of AI models more understandable. That's the black box problem, right? So regulators in finance won't accept models that are produced out of a black box. They want something that they can track and trace back. So that's something that will be there in a couple of years. Digital twins is, I think, also a very interesting development. Digital twins is basically the idea to create a virtual representation of a real entity. And then you can do simulations with it. Think of a car factory, for example, where you can simulate the production of a car. The same, of course, can be done in finance. You can create a twin model of the financial system. You can link the real economy with the financial system. You can do various things. Hyper-automation will be, of course, agentic AI. That is something I can see on the horizon, and I will also show you an example of that. So explainable AI. So we've created what is called a FinAI assistant in our research that can really show you, if you ask it questions, where they come from, how they are being produced. And I think this is a very important thing. So this is a research agent which you can't download yet on the App Store. It's only available for our purposes yet. But at least it shows how it can be done. I think that's a very important goal also, to really show, to make it explainable. Another example is the digital twin. So this one that we are currently working on, which allows you to visualize things, to simulate things, is based on more than 100 data sources and 100,000 of data points. So if you do that based on behavioral data, industry data, environmental data, and so on and so forth, you can basically do what this guy here is doing. You can translate it into scenarios, you can simulate things, you can analyze and modify them, and then you can repeat it until you're finally implementing new things. And this can even go that high that you can use it as a policymaker to provide your environment with new kind of master plans. So it's kind of an explorer that allows you to do what-if analysis and then also explore things. Another one is hyper-automation, and agentic AI is probably the word that is currently around. This term, everybody writes about it, everybody uses it. So this example here demonstrates how it could work. So it is basically bringing together a chatbot, an LLM chatbot, which is then translated into different components by an EVR, an interactive voice response agent. So it basically brings together functionality for resolving an issue, which is a non-voice option. Then it composes an email. And thirdly, it is converting it into a vocal message. So if you, for example, have a client question, then it can really translate this into an email. It could theoretically also answer it on the phone. And there is no human in the loop anymore. It's just a human validation, basically, at the end of the process. So I think that's something we will see more often now. And I brought a very simple example of how they are already doing that in a video. And I want you to really show that very simple example, because with this AI agent, theoretically, you can build really very complex ones. So please have a look at that.
We're going to be going through a quick demo today. In this fictional demo, a customer, in this case the Ant Equipment Company, has come to us and asked us to fill out a vendor request form. The data I need to fill out this form is scattered in various places on my computer. What we're going to do is ask Claude to look at the spreadsheet, check if Ant Equipment is in there, and if not, move over to the CRM and try and find some more information there. Once it has this data, Claude's going to then fill out the form for us and hopefully transfer the information across to the vendor form. The first thing that's going to happen is Claude's going to start taking screenshots of my screen and quickly realizes that the Ant Equipment Company isn't actually in the spreadsheet. So the first thing it does is it swaps over to a CRM and searches for the company we're interested in. Luckily, we get a search match, and Claude then starts scrolling through the page, looking for all the information it needs to fill out this form. Claude then autonomously starts transferring the information across without me having to do anything, and goes through the steps and fills out all the information needed. And then submits the form.
So that's kind of how agentic AI works, right? That's a very simple task. However, if you look into your work, in your daily work routine, what you are doing, very often we try to fill in forms, right? We try to pick or collect data from anywhere and to really bring it into another form. So there was a huge discussion going on whether research analysts will be substituted by AI. Well, you can say pros and cons to it. However, it turns out that many of those tasks here really get automated. So I think that's what we really will see over the next years. So what's the potential impact now after having gone through these developments and potentials here? So if you look into IT investments of banks, there is estimations that vary between 4.7 to 9.4% of IT investments in relation to sales. That is much, much more than all other industries have, if you compare it to insurances, to airlines, or to any others. So the investments are really huge. And that is not only because of AI that has happened over the past decades or so. If you look at the cost structure, on the other hand, then you will find that around 70 to 80% are made out of personal costs still. That's the highest part of it. And the second one is then IT expenses. However, of these IT expenses, of those 15 to 20%, only around 5 to 10% are invested in innovations in most time. Most of the money is spent on maintaining existing systems. So that has to be said. However, if you look at the potential savings of AI, which often said that it's around 30%, so these are all rough estimations here, on personal costs and also on IT, then this would amount to a really very high amount. Take UBS, for example. This would then be 1 billion in personal costs and around 300 million in IT. Over years, of course, not per year. But this is a very high number. So the savings potential just at one single bank are very high. But if you calculate that over the whole financial sector, including stock exchanges, including capital markets, and so on and so forth, it's really big. So there is a big opportunity here. There are some examples around as well. So Morgan Stanley, for example, has an AI tool for its financial advisors for taking notes in client meetings. We just had a discussion prior to this session here whether chatbots and AI will take over and no one will need a human client advisor anymore. That most likely will not happen in its extreme form. However, some of the things will be automated more and more. And this is really one example that shows us that the potential, at least also for the client advisors, is very high. But there is also the other extreme. ING, for example, is a pure online bank in Germany that uses a customer-facing chatbot for its clients. So if you don't have bank branches, you might want to use that. TBS is using it for its service center stuff. Of course, compliance and payments more on the back office side is something. So there is this Swift message automation example, for example. There is also the detection of irregulatory activities in the trading room. And this has been the most discussed potential probably in the financial service sector, but across all sectors as well, is coding, software coding, where you can, and if I talk to experts, to senior developers in the area, they say, well, we will still be needed. However, if you look at juniors, for example, around 30%, here you have the number again, could be automated so that they can really focus on higher value activities here. So there's a huge potential here, starting from the client downstream, the whole value chain, also up to stock exchanges and other activities. And these are only some examples. I think you will also heard of more of them. So there are many questions that had remained, and I think this is also something we in research discuss very, very often. There are some risks, but also despite the potentials you have here, currently the estimations go around 45 billion in revenues from AI based on GPT subscriptions and other projects, but the investments that are done over 1 trillion are not even have reached a break even from those investments. So there is a huge gap going on, and there is also media that is discussing whether there is another bubble around that will burst soon. We will see how this ends. And there are many risks also. If you apply it in the financial sector, of course, which is a highly regulated field, you have those model-related risks such as performance, accuracy, hallucinations, explainability, bias, and things like that because of the models that you apply. You could also have reputational risks like damage due to media things, financial risks, regulatory risks, and so on. So this requires let's say, a best-in-class governance approach that you really need to apply here. Impact assessments, responsible AI assessments, monitoring of existing solutions and how they embed or integrate with those AI solutions here. So what are the trends for the next years? We've seen those 4 developments. There are those LLM ops. So let's say these are operation and implementation and management tools for these large language models. So if you want to apply them in a financial services firm, for example, you need to somehow integrate them with the existing IT landscape. How do you do that? Version management and things like that. So there are a lot of things there. So this will be one of the topics, and no tools are around yet that really can do that. Despite the large language models, we've also seen the emergence of small language models, which seem to be smarter, smaller, of course. They require less compute power. They might have more increased accuracy and improved control. So this is something, and many of the big tech companies, for example, they are also going into that direction. Then there might be more specialized services for finance. I've just shown one. There might be more on that, because building on that layered stack that you have, you might also come up with some more industry-specific applications here. And last but not least, quantum computing. That's the other thing that is emerging very quickly, but not so fast as we might see it. There is a good combination between the two of them, because AI can help quantum computing, and so can quantum computing improve AI. So there will be a relationship between the two of them. So these are my 2 cents on the topic, and there are many books that have been written in the past few months and years, and also there is a new magazine that you might want to have a look at, TalkBox, where we also published some of our stuff. That's not very academic, but also includes some of the latest trends. So thanks.